Good evening, everybody, and welcome to this edition of Live Market Analysis for Monday. What is it, 17th of June? That in itself is a crazy thing to say. Lots of crazy things going on in the markets at the moment. That's my segue in my introduction. We'll go through all of those crazy things and more after we talk about the craziness of the disclaimer, which says that all the crazy stuff we're going to talk about in tonight's presentation is just information. More specifically, it's general information. That means it has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this very general information, you should consider it carefully and consider if it's appropriate for you. And if you're not sure, consult the help of a financial professional to determine its appropriateness. The other thing, of course, to remember is that trading is risky. You could lose money. In fact, you're probably going to lose money at some stage because not all of your investments are going to go the way you think. Ultimately, it's you that's responsible if you lose money, not me. But if you make money, then I'm responsible. I think we all agree on that. If we are in agreement, then let's head over to our chat window and type in your requests for today. So any stock, index, commodity, crypto, anything I can get a chart on, I'll give you my analysis, or it could be anything about trading. And if you've been watching my tweets during the week, I've done a lot of stuff, a lot of good stuff about trading. We might even get a chance to look at some of those today. Let's head over to the Amy Broker screen for the customary whip around the grounds. What you're seeing up there, actually, hey, let's do this. I know we normally do the whip around the grounds, but you can probably do that yourself. What maybe you can't do is get from a big list of stocks down to a small list of stocks. And there's a slippery slope here, and it could completely dislodge everything we were supposed to do today. Do I want to do it? I just want to show you the final list, maybe. You're going to see it tomorrow anyway. Well, let's do the final list. Because if I go through how you do it, and we've done it before, it's not like the first time we've done it, then it might take away from some of the stuff you're going to give me. But anyway, this is the shortlist for tomorrow of Longs, Breville Group. I'm just going to mention them because we might talk about them as we go. Commonwealth Bank, there should be no surprise to anybody why these are on there. Obviously, double green trends, good price action, great candles. Coles, a bit more of a turnaround play, obviously, than the first two we saw. EQN, which is Equinox Resources, I wouldn't have a bloody clue what they do, nor do I care. I just like the fact that we've got some great trends, some good price action. Obviously, we had a bit of compression through that 40-cent range. It's happening for a very logical reason. Major point of supply. 1, 2 tests, the third test we're coming through now, and the volume is probably the most important thing for me. Often I'll see charts that look nearly as good. I mean, if they look as good, I'll probably get it anyway. But really, the volume is the kicker there. If I see a big surge in volume, I know there's enough interest to get these little ones going. Hey, this might get to 50 cents, it might get to $1, it might get to 44.5 cents and go back to 4 cents. I don't know what's going to happen next. Global data centers, I think some of you are probably already on that, but that has been a very good one, and I think continues to be a show of demand side control. The India ETF we've discussed a few times in these sessions. Magellan Open Class Managed Fund. Look, it's a managed fund. It's a bunch of different little stocks, but I couldn't get past the chart. I thought the chart looks very good, and I guess if you do go for one of these managed funds or these ETFs, you're kind of saying, I reckon they'll do a better job than me. But I think you could also say, well, if I put a bit of money on this, I know I'm not just getting one stock, I'm getting a few stocks, and maybe that might appeal to you as well. But for me, I like to go, I'm going to pick my own stocks. That's kind of what I think I'm good at. NAB, that's picking a stock there. I think that looks pretty darn good. Great consolidation pattern moving through the top of that supply zone. Pro-Medicus is just to continue to follow the trend on that one. Polynova, a bit more of a turnaround play, so getting a mix of setups. Semi just as a continuation, it keeps going up, and that's another one of those sort of managed funds as well that looks pretty good. I hope you've also been looking at the shorts as well, because some of these have been performing well, and by that I mean they keep going down since I've been putting them in the shortlist, which I think maybe we're in our fourth week now, and Ampol's been featuring prominently in them, and it's been run as a featured chart many times. So, I know we tend to look at the markets or investing as what can I buy, but if you set yourself up correctly, and you could do it with CFDs, I do think that's your best way to go about it, or you could do it with options, but not all stocks have options on them. So, for example, buying puts or selling calls, or creating a synthetic out of those two things, or selling a call spread. That's why CFDs, you just sell it. It's very simple. then this you could have been selling around about $35. Now it's sort of $32.50. Whoop-de-doo, but it could, if you're getting a bit of a beating on your longs, some of these shorts can help you. Atlas is one that again I picked up pretty early. Horizon I think is more of a turnaround play. Okay, so the opposite of some of those turnaround plays on the long side, you can see it's just breaking through its long-term trend ribbon, not a downtrend ribbon, trend ribbon. It's got rallied back up. It's tested that trend ribbon, and now it's coming back down again. CIA's already gone through that process. We know iron ore is quite weak, and then there's a few of these property trusts. Again, they're all carbon copies of each other, aren't they? Corporate Travel, which again I picked up around 15, it's now around 13. Fletcher Building, pretty sure I picked up that up around 320. It's now around about 270. GPT's one probably just starting to get going. IGO, you all know my history and track record on IGO. Karoon as well is one that is much loved for some reason among Aussie investors, but you can see there what the trends are. Mirvac, again, has been a pretty solid one. Monadelphous, maybe one that's just about to teeter over the edge. Regis Resources is more of a turnaround play again. Transurban, a bit more of a turnaround play, and Woodside is more of a continuation, unfortunately, for Woodside. Investors, I know you love this thing, I know you'll never sell it, but balance of probabilities are here. If we were discussing this any other time during these presentations, we'd be saying minus 1/3, minus 1/3, minus 1/3. So, and what you end up with is something that kind of resembles your own little hedge fund. Okay, and a hedge fund doesn't aim to win on every trade, on every position. It aims to, the hedge fund manager looks at the balance at the end of the day, and some of their longs have won, some of their longs have lost, some of their shorts have won, some of their shorts have lost. But if they're doing it right, they get to the bottom and they check the balance. The balance is a bit more than it was yesterday, and all of those trades effectively just dissolve into insignificance in themselves, and therefore, by definition, none of them are prominent in your mind. It's just a process. It's just a mechanical process. It's just work, isn't it? It's just doing the work. So that's maybe a little bit of a different way of looking at things to get us started. I will just pick off the key major indices because I have to start the Nasdaq because it gives us our portfolio management. And the portfolio management I still think is full risk position or a full portfolio risk position. Having said that, it's tough to sometimes reconcile that view here with the ASX200 because whilst the Nasdaq is my favourite risk-on market, the Aussie market unfortunately goes through phases where it's really crap. And this is one of those phases. It's been like that for a few weeks. And to be fair, all the way through here, the Nasdaq was just as good as using the ASX200 because the ASX200 was moving. It was moving, almost in tandem with the Nasdaq. But then we've had literally all of April, all of May, half of June and half of March almost. So 3 months where it's been absolutely rubbish. So it then begs the question as to whether you should be, using that to determine the portfolio risk for your Aussie shares. And I do end up sort of sometimes having a bit of a US focus, and obviously US stocks are a big part of what we do here also. So it might be worth considering using something like this for your US stock portfolio, and then something more like this for your Aussie stock portfolio, which would have you more at a neutral stance, isn't it? You're probably 1/3 in the market here, at the most 2/3, 50-50, maybe split the difference, but we're not in a full risk position here, are we? So I think they're the two important things. Just looking for red flags. There probably are a couple of red flags developing. Like I don't like the Russell 2000 chart there. And then also, I'm pretty sure I have it in here as well. Maybe it's up here, or maybe it's not. Maybe I'm imagining it. No, it's not in here, but I will show it to you in a second. The small cap banking sector, for me, is throwing up a bit of a red flag at the moment. Europe, big drop there in the CAC. In the DAX is also coming off. The Stoxx 50, the FTSE not looking so good, and even the Spanish market, which we said was looking pretty good last week, is not looking as good now. Let me give you the names of those. IBEX 35. Hey, Nasdaq still saying full risk position, but some of these other things might cause us to pull back very quickly if the Nasdaq throws us a sell signal. Let me get rid of some of these. Hang Seng is not looking great. The Nikkei is looking very neutral. India is the best of the best. So if you caught that tweet during the week where I put up this chart and I said Chinese stocks are making downtrends great again, because as promising as that was, this move beneath the long-term downtrend ribbon, failure to get above it and push down is looking quite dicey. And bringing it back home, obviously we're in a neutral mode here, but you can see how influenced we are by not the Nasdaq. In terms of sectors, this might be helpful, I think, in terms of your Aussie portfolios. Discretionary is still fine. Energy we know is a no-no. That looks bloody awful. How is Woodside not tanking yet? Because that's largely the Woodside index. And that is one of the worst sector charts I think I've seen in a very long time. Contrasting that, the money's got to go somewhere, doesn't it? Because if the index isn't falling, think about it, if the index isn't falling and you've got energy and resources about to see tanking, then the money's going somewhere else. It's not going into gold. I think gold's turned. It's going into healthcare. It's going into defensive sectors, financials, healthcare. Tech is starting to look a little bit toppy there. Still okay. Don't get me wrong. Still okay. A tiny bit toppy. Materials we know is in big trouble. Resources is the same thing. Real estate. Interestingly, so many of those charts I'm finding in those downtrends are real estate stocks. And yet that XPJ isn't looking terrible just yet, but maybe that's not around that is around the corner. Staples, a very defensive sector. You can see compare and contrast. Telecommunications, neither here nor there. Utilities probably coming off, and we get into some of those other indices. So I think you can see the haves and have-nots. Let me quickly head over to here, and I said I was going to show you the not that my brain is now functioning. So I thought that looks a bit dodgy, doesn't it? And it sort of harks back to what we saw with the Russell 2000. It doesn't speak of impending banking crisis, banking meltdown just yet, but it doesn't exactly speak of strength in what could be a problematic sector for the bull market. Let's have a look at yields, because yields are actually coming down, so that's a little bit counterintuitive. So, hey Carl, look, you keep telling me that when yields come down, stocks go up. Well, the Nasdaq's going up. Nasdaq loves low yields, but everything else is going down. Isn't that a concern? Shouldn't everything else be going up too? Yes, it should be. And if it's not, what's the problem? When everything else apart from the Nasdaq is going down and yields are going down, what is it pointing towards? What is it telling you about the US economy? Answer in your chat window for me, please, because I want to know if you know what it means. Answer will be coming down the track. Aussie yields also heading down. And again, why is this happening? Shouldn't that mean that Aussie stock should be going up sometimes? Let's go to precious metals here. Silver, 50-50. I'd rather be out of the market than still long. That would be my choice in terms of minus 1/3. I think we've had at least a couple. And on gold, I think we've had at least a couple as well. I think at most, in terms of exposure here, you'd have 1/3, and that 1/3 would be gone on a close beneath 2304. So we can take that sort of thinking into these commodities, and that might help us draw a line back to our portfolio, Aussie portfolio. We were holding gold stocks, we were holding silver stocks, we were holding copper stocks as well. What would you rate copper? Would you rate it still holding plus 1/3, plus 2/3, or plus 3/3? I think 3/3 is off the table. I think 2/3 is off the table. I think 1/3 is off the table. To be honest, I don't think you'd have any position here on copper, and we certainly wouldn't have any position on iron ore, because that has gone double pink. Uranium has been doing its very best impersonation of a trend change here. Pardon me. It is still early stages, but it is now more than just flirting with that long-term trend ribbon. And if it should close beneath it, okay, I would say, given that we've had that little interaction here, like little bounce here, little dink, if we close beneath it now, then we are long-term downtrendish sort of stuff, okay? Natural gas, we had a look at that with some optimism, but I did warn you, every time it looks good, it then goes down, and that's what happened. And crude oils are doing nothing. Thermal coal has ticked down, doesn't look great, and that I think is sort of starting to look good there. I think a few coal investors got ahead of themselves, and now that's starting to tick down, and metallurgical coal is neither here nor there. I think that's a decent whip around the grounds. Plus, I've already given you my favourite ASX stocks, longs and shorts. So I've covered a lot of ground. Let me head to the offline requests, assuming there are no breakages in the chat window, and there aren't. Jenny's asking about the US debt situation. Maybe it might have something to do with it. Not what I was thinking about. The word I was thinking about starts with R, capital R. Generally, when stocks are going down and yields are going down, it means the market is factoring much lower rates down the track. And why would the Fed have to cut rates? Think about it. Perry's done it with a little r, but he's got it. Let us go to the offline requests. Matthew's come in saying here, I hope you had a nice weekend. I had a wonderful weekend. Weather was perfect over here in Perth. Question, which is a bit of a doozy. I haven't read this, by the way, so now I'm taking a big risk. Involves end of financial year, so it's a pretty topical at the moment. I know that I don't give financial advice. No, you're right. But why is there selling and adjusting for tax purposes, and how do we prepare for it and manage our portfolios? Note he's been recently reducing his exposure to stocks 40 hours before their quarterlies to manage unforeseen risk. I don't mind that idea. So just on that topic of taking a little bit off the table before a big event risk, so companies about to report, it could be quarterly earnings. I wouldn't think quarterly would be regularly a big enough thing to be worried about, okay? But certainly half yearlies and annual results are usually pretty good reasons to take a little bit off the table. I don't think you need to completely get out, but I don't mind that idea. Generally what we find is that charts tend to break in directions of the trend. So if you've got a stock that's trending nicely, not always, because we know there are exceptions to the rule that we get belted every now and then in earnings season. But generally when stocks are trending, they tend to break. They tend to have good results, right? That's why people are buying. They're anticipating those good results. Sometimes they miss. Generally, when stocks are trending down, those results tend to be bad. We see that so many times. That's why the stock was going down in the first place. So hopefully that answers your question. I don't mind taking a little off the table, but not all of it. Why is there selling at end of financial year? Often there's a tax loss selling, so people that are losing a lot of money on stock ABC. Oh, let's not use, let's not insult ABC, which is what's that? Adelaide Brighton or whatever it was. We won't insult that. Let's use a completely generic stock or three-letter code that refers to nothing in particular. So let's say you had IGO, just randomly speaking, and you're losing a fortune on IGO. Then you might want to sell your IGO shares, crystallise your loss on that to help offset some of the profits you're probably showing on, let's just take a random three-letter sequence like Pro Medicus, for example. So that's assuming you've taken profits on Pro Medicus, then the two would balance each other out. And that's why people are doing it. Matthew, what could that result in? It could result in some of those really bad stocks like we're seeing right now. Surprise, surprise, here we are. I just said it's the 17th of June. And we're seeing stuff like IGO getting belted, isn't it? Many of those lithium stocks are getting belted. Many of those battery metal stocks, graphite stocks, all of those ones are getting belted, possibly because people are using that methodology. Then does that mean they're automatically going to bounce on July 1 because all of this selling is done and people are going to realise that they're suddenly cheap and try and buy that back? I don't think so. I don't have the research though. The only way to answer that definitively is for me to go do the research, but honestly, Matthew, I don't care. I couldn't care less about it, and that's why I'm not going to do the research. All I care about, of course, is the chart, and the chart will tell me if money is moving back in, but it will probably take a long time on many of those stocks because think about what they look like, and where I want to get in is after a nice basing pattern, even to get me to an aggressive trade. So hopefully that answers your question and maybe answers a few curiosities from other people out there. I'm going to go to Craig. Craig has two Aussie stocks for me to do. First one is HLI. So let's head over here. And last time we looked at it, I think we had a nice white candle. I don't know, that FRP is kind of hovering. I want to say it's maybe associated with either that one or that one, because that's where I see, where I could add a third. Turns out since then, things haven't gone in the way of the trend, or not enough to facilitate these trades being in profit, not profit, but doing very well. Let's say they're not down a whole lot, depending on which one you got into. But clearly that's a problem. That's quite a supply side showing. No problems really anywhere else. They're all very, very mild, dare I say, mediocre candles. There's really nothing all that terrible going on here. And, it's probably consistent with the broader market as well. In fact, you can see that it's still holding on to some outperformance compared to the ASX200 benchmark. So I don't think there's anything to panic about, but there are some issues with supply. I would say, we obviously this is what we do here. We come in and we say, well, where would we start to manage our risk? And pretty simple. The methodology is to look back to previous points of demand. Obviously, where there was buying in the past, we expect that there could be, not should be, but could be buying in the future. How will we know if there's buying in the future? We'll see lower shadows there. We'll see white candles there. A little bit of demand came in today as evidence of that. Okay, but it wasn't strong demand. We still ended up with a black candle, but there is some demand there. So if we were to close beneath that, then I think you have reason to minus 1/3. If we close beneath that, I think you minus 1/3, and to be honest, you might go an extra minus 130 just because it's closing beneath the light green ribbon. Why is the light green ribbon important? Because it in theory represents a point of demand in and of itself. My philosophy, I always said our philosophy there, and I think I can say that now, can't I? Our philosophy is that the light green zone, the short-term trend ribbon, is meant to be dynamic support. So therefore, if we close beneath it, that's not a good thing either. It's all about, it's just a narrative. I talk about narratives, don't I? I complain about narratives. You're probably sick of hearing me talk about narratives, but there's a narrative here as well. I mean, there's a story being told in the candles, and that is the story of demand and supply. And if we start closing beneath some of these levels, what is it telling you about how strong demand is compared to how strong supply is? But what can I do now? I think you can imply from what I said, FRP, but getting a bit nervous. I don't know, it's a horrible feeling. I know it sucks, but that's just part of the game, isn't it? And it would be wonderful if we could be the Nasdaq, but we're not. FMG has got much more serious problems. This one turned around quickly. You had to be on your toes, and we haven't looked at this one for a very long time in this session. So I think the last time we looked at it was probably on this candle here, where I've written plus 1/3. Every day of the week for me, that is a plus 1/3, because it's a nice turnaround play, I think. And honestly, at the time, my rhetoric really frustrates the hell out of me that I can't make that happen, but I can do it here. So at the time, we were talking about the iron ore price actually looking pretty good. It was closing above the long-term trend ribbon. It was showing that was now transitioning into an area of demand, and therefore I said, look, I think the long-term trend has turned up. So, very good reasons for doing this. So where would we have maybe changed our mind on it? How would we have managed this trade? So let me get rid of some of these things here. Probably quicker to delete all studies and put the 1/3 back, but I'm on that track, aren't I? Not enough to do anything about it. Let me even zoom in so the candles are looking nice and big for us. That's not a great candle. It's a little bit like Helia, isn't it? But for me, it's not enough to do anything about it just yet. There's no reason to. Neither is that one. What are we looking at? What can we see coming into play right now? You can see even that little lower shadow. We're there. We're at the light green zone. That's not the candle I wanted to see, but I know I'm still there. But I know also what's going to happen here. Okay, and minus 1/3. And I think to get out a third of the third, I think is, being a bit pedantic. So let's just say that would be the exit of that 1/3 position. Because it is a turnaround play, it's not a continuation play, and therefore it comes with a greater risk. Okay, I'm literally tuning in, coming in at the end of the day, haven't seen it all day, which is the best way to go. And I go, okay, well, there's the bounce. I thought that was going to occur. I'm a bit concerned though, because the bounce isn't great. I mean, look at that upper shadow. There's still plenty of supply in the system. Oh, okay. Whew. there was nothing to worry about here. The big question is this a plus 1/3? What do you think? Would you add a third here? It is a great candle. The price has just rebounded off that light green zone. We're still a long-term uptrend. It's still turnaround play mentality. What do you reckon? What would you do? You don't have to type it in, but I do want you to think about it because, we should be trying to get as many real-life examples in these sessions so you know what to do in real life. And we could get that chart next time. So I don't mind. I don't mind if you did, but I'm annoyed by the fact that. So if I got that first one, I probably wouldn't add it. If I didn't have it, I could see why you might do it, but I don't think I want to add risk to this just yet. And the reason for it is that in a good uptrend with strong price action, the last trough shouldn't pierce beneath. It shouldn't eclipse the demand I expect at the second from last peak. All right, so let's call this, actually, I'm going to draw this last line back up. We don't know where that line's going to end. Okay, it'll end somewhere we don't know yet. But if we label this as our last trough, so let's call this, say, T0, then call this P0, call it P0, which makes this P1, and therefore we can see that the last trough, T0, is beneath the second from last peak. So we don't have that great price action I really want to see, especially in these sort of turnaround setups. I want to see that the market is back in consensus that we want to be demanding, not supplying. But I can see, I probably wouldn't add to it, but I can see why if he didn't get the first one, he just coming into this, I can see there's some demand coming in. I think you could do it. So it's a bit line ball. I can say with certainty, if I get a nice white candle close above here, then that's giving me more confidence. Okay, so up here, let's write it in now, plus 1/3 over there. Let's see what happens. We kind of know what happened. Okay, did it close? Did it close above the point of supply? I'm not sure. Maybe it did, maybe it didn't. I won't measure it because it kind of doesn't matter. We didn't get the candle we wanted. And this is why we often talked about hard stop losses and soft stop losses. And certainly for many, many years ago, I would use these things called on-stop orders. Some of you are probably using them now. And I found I'd get into so many trades that ended up on the session looking like that. I'd be going, I don't really want to be in it now. And you'd kind of begrudgingly stay in it, right? Because you're in it. But you really know, I don't really want to be in this thing. So you do that enough times, you kind of realise, well, if that's not the right thing to do, then the opposite of that must be the right thing to do. And that's a very important statement I just made. If that's not the right thing to do, if I can see over and over and over again that's not the right thing to do, then there's the possibility that the opposite of that will give me a good outcome. I did it all these times, got a bad outcome. Well, if I did the opposite of that, I would have had a good outcome every time. Okay. So what I like to do now is to wait for the candle close. And here's the risk. The risk is it does close on the high, and instead of the on-stop order getting you in at, say, 26.98, you're getting it at 27.20. But is that such a bad thing if you're getting in with that beautiful white candle high close? I don't think so. I think it feels worse if you get in on that candle. So no, I wouldn't have added the third there. That's just me. You can do anything you want to do. And that day you go, I should have done it. Not really. No, look at that candle. Even look at that candle. Like it's going up, but it doesn't want to go up. So I'm going to be extra cautious and extra vigilant on this one. That's taken out the previous trough, but not enough to get out at all. No way. Not even that one, because yes, it's coming down, but it's begrudgingly coming down, and we've got the light green ribbon. That's a problem. Okay, we've got a problem here. So this should have been a bounce. That's a big black candle. That's a bit nasty. We've already taken out the trough. And if we close beneath here, we're going to take out a trough again. So that's a problem for me. So I think for me, after all this that's been said and done, this is the first point that I would go minus 1/3. Okay, and all we're really doing is scrubbing our first entry, which we said was here. So it's about break even, isn't it? Let's see how that one turned out. Where was the, see, not enough to do the job. If I didn't have a choice. And here's the problem again. It's not a problem, but it is a reality. What if we had a stop loss in the system on that day? Maybe it got us out, and it would have got us out at a much better level than where we eventually got out here. So there are pros and cons. There are swings and roundabouts. Sometimes that's going to keep you in a really good trade. Other times it's going to cost you by staying in. So out on that day, if you waited to the end of the day, you would have got out somewhere here, and in which case you would have lost maybe 80 cents a share on that particular plus 1/3. And then you're probably pretty glad, actually, aren't you? After that, you actually, like on that day, you're cursing the fact you didn't have a hard stop in the system, aren't you? And this is the beauty of this system, all right? There are many touch points, and you will grow to realise that any individual touch point is completely irrelevant and not worth your stress. Just follow the system. So that gets us to here, where there's nothing more I need to say. There's no real analysis that needed to be done on this chart, was there? So that's why we could indulge ourselves with that case study, because there's no reason to have any risk on this at all, as we've already explained. Why? Would I go short this? It did come up in my shortlist today. I did shortlist this. I didn't shortlist the shortlist. Maybe I did. I can't remember. Did I? In here. I didn't shortlist the shortlist. I could see why you would want to shortlist though. Yep, it looks pretty awful. And I'm guessing maybe that's why Craig asked me about it, because I don't think Craig would be long that one. Would you, Craig? That's the offliners. So let us head over. I just want to check that I didn't get any in my messages. Good, you can't see this, but you're not supposed to, but I don't think I've got any. So sometimes I get them in my Twitter messages. Jim T, who I got a message from. If you're in session, please let me know, Jim T, because Jim sent me a wonderful direct message on Twitter/X, telling me that he started using the system months ago. I think it was November 23. There you go. So he's been using it for the better part of 6 months now, hasn't he? And he said, look, didn't work out all the time. Got a bit of a slow start, but now he's doing extremely well. And it's completely changed the way he thinks about and looks about the market. And that was a really wonderful message that he sent me. It makes me feel so good. I've had a couple on Twitter as well this week, and I love to hear these things. And as you know, we're here out of love, out of love for each other. It's I'm not quite roaring kitty, of course. I don't think he's doing it for love, but it is wonderful to get that feedback, and I really appreciate that. And I wasn't sure if Jim was even in my webinars, or he's just following me on Twitter and just doing it that way. So if you are, Jim, here, let me know. Or if you're listening on the recording, please send me a message by email. Let me go here. Let me show you what I'm doing. So I'm here, Australian Lithium Spodumene Assessment, and I'm updating this damn thing. I was doing this before we started today because I want to send out my lithium tweet, and clearly there's no update coming today, which is very frustrating. Anyway, I was about to finish it, but I won't do that to you. I'll do it afterwards. Let's go to your requests online, and starting off with SUM for likes a bet, Roscoe. I'm pretty sure Roscoe's likes a bet, aren't you, Roscoe? Let's go SUM. Still looks good. Got a thumbs up from Roscoe. And what are we? FRP 1/3 here. We don't look at this obviously all the time, but for your reference, that's where the next one would be. And in fact, that's where the next one would be. So you'd definitely be running a full risk position at this point in time. You'd be frustrated by today's candle. Roscoe is frustrated by today's candle. I can feel his frustration. He was feeling pretty darn good at 46 cents somewhere early in the morning. And then we end up with a candle like that. And it's a crisis of confidence, isn't it, Ross? Because you've got to go, I know what that means. But I also know that Carl said to, give things a go and follow the darn trend. Okay, Ross would say a different word. And sometimes it's hard to follow the trend, of course, because we're making a bit of money, and that's hard too. I just want to get out. screw the trend. I just want my money. It's not 50, like it got pretty close. And within 5%, it's a rule I think we've said a few times in the sessions. If I haven't said it, then let's start saying it from here. Within 5%. So on $100 stock, $95. On a $10 stock, $9.50 plus. Right? That's your kind of window. On a 50-cent stock, we're looking at 47.5, and it didn't get there. Right? So I still think there's a bit of unfinished business. This candle's not great. I still think you're FRP, Ross, but you got to do what you got to do. But I'm telling you what I would do, and I'm still FRP. Obviously, I'm not buying any more on the basis of that candle, but watching the next candle very closely. If you see the right black candle, the right upper shadow, or the reach into 50, then we would start to manage our risk. And I do think you knock a little off the top at 50 cents, because I think other people will be doing it as well, and that's why we're going to do it. Adonis has got SXE, which, it may be a little bit of a victim of the broader market malaise. In a better market, it might have got going, but it's not, and it hasn't, unfortunately. And we just have to then do the things we have to do. It's very simple from here. We don't curse our luck, and we don't say, oh, if only we'd gone up like the Nasdaq, this would have gone to $2 and I'd be out. It's like, what's the point? It's just totally unproductive to think these things. All we need to think about is, okay, what do I have to do? And I know that there's a point of demand here, and a strong point of demand. Like people out there, fund managers, some fund managers, right? Because not all fund managers are thinking this way. Clearly, you can see from the chart, some of them are selling, but some of them are looking at that 150 zone as their buy point, as their value zone. And coincidentally, it's the light green zone as well. And we really only got the most feeble of bouts this time. So you've got to start to think their pool of demand is being filled or fulfilled, whichever way you want to say it. And each time we come down and we interact, let's say that the first time we interacted with it, there was this much demand. And then we interacted with it. Some of that, a bit more of that money went in, and then a bit more of that money went in. And then we kind of get to it now, and maybe there's only just a sliver of demand left. And we can see that supply is pretty motivated. Okay, in fact, that's too strong a word. We can see there is some motivated supply. I wouldn't say it's pretty motivated, even though that's bad grammar anyway. So we just say, well, if we close beneath these troughs and the light green zone where there should have been demand, if we get there, that demand's gone, and that concerns me. And therefore, I'm going to take some precautions, and I'm going to go minus 1/3. And I'll leave it to you whether you do just a third or you do 2/3. I think 2/3 is warranted because, and this is just me speaking, how I would do things. You've got to do your own thing. We've got lower troughs. We've got lower peaks now. We're going to have lower troughs, and we're going to close beneath the light green zone as well. So 2/3, and that if you felt this way inclined, a maximum of plus 1/3, just to see how you go with that long-term trend ribbon, because it's still a very, very good long-term uptrend. Let's go to VEE, and the question that Adonis is asking, is the party over? And unfortunately, I think they're very similar charts, and I'm just going to go ditto on this one as well. Last time we spoke about both of those, we were talking about full risk positions. Maybe it was on that candle there, I don't know, or maybe it was here, I don't know. But anyway, you get the picture. Back here, that's all we can say. We can't say anything else because that's what the system's telling us. And did we have any reason to do anything since then? Well, that's probably your one there, Adonis. If you really, actually, wait a second, what's happened? No, look, that's a candle I drew saying if this candle occurs, we're going to get out. Let's leave it there. Let's leave it there. So clearly that's when we did the last analysis, somewhere around here. And has it occurred? So that's a tickle, isn't it? That's the tickle. So we'd still be there. That's still fine. That's still fine. That's all good. That's still good, but we kind of know where we're going with this. And then I'm not even sure if you can really give it another candle after that. and there. So probably already should have done the third on that one, Adonis, and we have actually crossed over with. There's a few things going on here, isn't there? And in my haste, I've missed a few things. Close you beneath the trend ribbon. The trend ribbon's actually turned pink, so it's giving you plenty of warning signs there. The rest of Adonis's stock picks are in the US, so we'll come back to that. Hi, please, and I don't think that's Pilbara, is it? PLS. I think that's please. This one's not looking all too good, is it? Unfortunately, and I take no joke. People think I'm enjoying this. I don't enjoy this. I enjoy the fact that I made the right call on it, but I don't enjoy people losing money on it. That's just silly. But it's just like what you can only grab people by the shoulders and shake them and shout in their faces so much, right? Let's look at TRO. So obviously Linda's talking my language. And again, look, things aren't going to go up forever, okay? 150, is that a big round number? I don't think it is. Who's going, oh, please God, if you just let Droneshield go to 150. It's just not happening. Maybe $2, maybe $10. But I don't think 150 is something you're going to be too concerned about. Having said that, had a little bit of an impact today, didn't it? But not much, still big lower shadow. This is an indecision candle. There's no sugarcoating it. But it's not a get-out candle as far as I'm concerned. So I'm still an FRP on this, and it's a bit like I said to Adonis and Ross. You're going to feel a bit of this pain because the market's a bit rubbish. Your stock's bloody awesome, but it's maybe you can feel that trend is not coming to an end, but slowing down a bit. I'm still FRP here, but all the things we've talked about that we're going to do. The next trough is all the way down here, and the uptrend's miles away. So I'm FRP on that one. As much as Linda, I think you wanted me to go, Linda, get the hell out, take all your profit. I can't tell you that because my job is to follow that trend as long as it is going to go. And that's not the one I meant to type in, but it's a good little proof of what I said before, following the trend as long as I can, as long as I can. FND was where I was heading with it, and similar is that we're seeing a bunch of these that have done so well. They have been the market's absolute best, the cream of the crop, and they're being stymied by the broader market and the lousiness thereof. We have had some minus 1/3 here in terms of our analysis that we've done in here. I think I might have drawn a big black candle in there, so let's remove that. There. It's just, that's probably a minus 1/3. I don't know. I think this has given me lots of reasons to not have a full risk position, as you can see through here. It's been a difficult uptrend. I think I'm at most 1/3. I won't draw another thing on the screen, Linda, but I think I'm at most a third here. But happily adding some risk if we can get a nice white candle close near 4. I think we've not. Well, why wouldn't you wait for it to close above 4? No. I think we're dealing with 4. We're already, mucking around with it. So this, I know that high's 395, 392, but I don't think 4's a surprise anymore. So happy to hold some, not all. I'm not comfortable holding all because of these black candles and upper shadows, but certainly holding some and adding. That's my next thought on a high close to $4, and then you know what to do beneath that trough there, Linda. Let's go to C79. Is it a turnaround play? Not yet. It's a turnaround in the sense of it being a turnaround for a bearish setup or for a short trade, because the long-term uptrend is turning into a long-term downtrend, isn't it? So you can see that we have broken. It's a classic. It's a textbook pattern. Like before you met me, you probably heard me talk about this turnaround setup. I thought, oh, what the hell is he on about with this turnaround? Surely, But now you just know. I can't make this stuff up. It just keeps happening. So it's a turnaround for down, but it's not a turnaround for up. So I'm not sure. I think you're kind of asking me that, Michael, because you're saying it's up 5.5%. Is that making it a turnaround? No. It's not a turnaround for up. It's still a turnaround for down. For it to be a turnaround for up, it's got to do a lot more work than just 5.5%. It's got to do this. I won't have enough room to draw it all, but you know what I mean. Like it's got to interact here, and it's literally got to sort of flip that pattern. So we don't have enough history to show you one, but I'm sure we'll come across one. But let's say because we're kind of down here, right? So just picture that is now, we've got to do this. We've got to get back to that trend and interact with it a bit and then go back up. So this is miles away from being a turnaround play for a long setup. Perry's got some US stocks. We'll do those later. King's got high once again. Carl, hi. King, VNT. What am I saying? This looks good. I'm going to go so far as to say it looks very good. Needs a little bit more cooking, I think. And what sort of ingredients do we like to work with? So we want to see. We do have higher. Should we do a little? Get rid of that and draw these in. No, it's not going away. Let's do it this way. You go away and draw this in. So I just want to grab the price action. And so, we'd like to see a higher trough, wouldn't we? So something in there, something maybe closing up there. We want to see the right candle. We know what that looks like. It's going to look like this, about to appear on your screen. And it's going to look like that, but with a white body. So something like that. And yes, for me, if I saw that, then everything else looks good. Long-term trend, short-term trend, and then I plus 1/3 on that. But that's what I'm waiting to see. Right now, I don't think you need to do anything. If you had it, I could hold it because all the other good stuff is going on. But then I'd also be very mindful underneath here. And certainly underneath here, there's places where we would need to manage our risk if we're starting to close beneath those areas also. Let's go to BIO now, also for King. They're almost identical setups, aren't they? So I'm going to go ditto. I can see every reason to have some. The thing that concerns me a bit about this, it's a bit more than a bit. Can you see it? Can you see it? What's King? Maybe you can respond to this one. Is there something that's kind of nagging away at your confidence on this one? Maybe here. All of these. Here. It just feels like there's a lot of black candles on that screen, and that smacks of distribution. So you've basically got a seller, you've got an insider, a big shareholder there that probably got in from next to nothing, got placements near zero, or they've been in it from the float, and they're just taking a bit of profit every time it goes up. And they really don't care what the story is, how good it might be, because they've got so many. Even once they've sold what they're intending to sell in this course of action, they're still going to have plenty. And it just feels like that. It's going up sort of in spite of that selling, which if the selling stops could be very good. But it's enough to just turn me off a little bit. I mean, if you've got it and you like it, you know the story better than me, obviously. I can see a path to holding some, but it's not one I think I'm going to be actively pursuing unless I start to see, give me a few white candles in a row at least. Let's go to Jason's got TJX, which I'm guessing now is a US one. He's actually telling me that. They're all US. We're going to Michael, who's got XRF. I know that for a fact. Is Australian, and actually I like that big white candle. So you can see, this is a great segue. I don't plan this. You guys ask the questions in the order you ask them. And to go from that last one of BIO, which is an uptrend full of black candles, to this one here from Michael, XRF, which is another uptrend full of black candles. Amazing to see. But we've actually got a decent white candle today, and that's what I want to see on that last one. I'm going to go plus 1/3 on this because I can't fault it apart from the fact that there are too many black candles on this bloody chart. But in consideration of how bad everything else is at the moment, how frustrating things are, you've got a bit of outperformance coming in there, a little bit of volume picking up as well. I don't mind that. I think that's pretty interesting. Plus 1/3, see how it goes. Adding on white candles break through 145 because this breakout could be pretty good actually. It's a big wide base pattern actually that it's moving towards the top of. Actually liking it even more now on the weekly chart. But going to this eyes wide open, there's a lot of black candles on that screen right now. JDO, yeah, it looks similar. Base pattern through sort of 140. In fact, the prices are very similar. Price action is not as good here. I do have some problems with price action. I've got some problems with the fact that there just feels like there's a lot of supply around here, and you can see how it has manifested itself quite severely in those two shadows. I wouldn't buy this right now, and it might be famous last words, but you know, look, if it prints a nice big white candle closing at or near 145, I could change my mind on it. But right now, I can't see any reason to buy it. If I had it, you know, there is a path to owning it. I'd be worried about here, close under here and here, and certainly under there. There's your minus 3/3. But I'm not excited about this one at all, to be honest. There's just not enough boxes being ticked for my methodology. Let's go to HLS, which is actually, there you go. So this is like just one of the great downtrends, isn't it? And if I zoom out, I mean, this is one of the great downtrends you'll ever see. But downtrends, or downtrends for companies that don't go bankrupt, I guess, come to an end at some stage, if only because that trend, they go sideways for so long, the trend ribbon eventually changes. It's had a couple of goes at it, so I can see maybe what you're after here, Michael, what you're going on, what you're looking at. But you can see it's got a bit of work to do. I mean, at least even in those times, we saw the amber come in. It's not quite there yet. But this is, you know, I like that, and I like this. Is it an aggressive setup? It's got the hallmarks of an aggressive setup. Okay, so big volume burst on this low, big one here, and you want to see these even here, and then a push off here. Okay, big, nice big white candle. Big white candles through here. You know, there have been funds coming in trying to pick the bottom of this. Okay, the shorts come back in, and the news gets them because, let's face it, they have been such a crap stock for so long with just such a consistently bad news flow, right? So people are trying to find the bottom, trying to pick the bottom, trying to speculate that's bottom. Then the news is just awful. I think some of that demand is starting to stick now, and I think more than anything, it's not a case of that demand is sticking. I think it's just the supply is gone, and that's starting to give that demand more of an impact in the market. The question you want to know is this an aggressive setup? And I'm saying it's got all the hallmarks of it. Ideally, we can get in a bit before this. The problem here, this is the big elephant in the room, is, you know, if we do what we did back here, then you have to ask yourself, what's the point of getting in? And that's where we are. So if you are this way inclined, you know what you're getting yourself into. This is a high risk, aggressive setup, adding small at the start and then adding on really emphatic signals that this is turning around. It's a yes for me, okay? But knowing full well that this is a high risk setup. Dare I say, I'm going to look past the fact that we are in that ribbon, just on the basis that I do like very much what else has happened, and go plus once. I'm saying 6 and I'm typing 3 out of force of habit, but I think you know what I mean. And some people are like, I'm not doing 1/6, Carl, I'm doing 1/3 anyway. Hey, you do you. Let's go. Let's stop typing in new ones because I'm way behind. King saying black candles on that other chart. Well done. So I know black candles is where I'm going to stop, and that will remind me. And Michael actually saying, is Healius a turnaround play? It's not a turnaround play, Michael. No, it's not even close to a turnaround play because it's got to do all that other stuff we've talked about before about turnaround plays, right? Somewhere around here, it'll be a turnaround play. No, we're looking at this strictly as an aggressive setup. If it was a turnaround play, then I could be going a third. For a turnaround plays and continuations, I can go a third to begin with. Different Michael. 2 Michaels in a row. This one asking about 88. I wonder if you're asking about a buy, Michael. I'm not seeing this as a buy. I'm not seeing this as a turnaround play just yet. For that to occur, it needs to do this. If anything, it's still turnaround play to go down. Okay, that's what I'm worried about here. I can't own this in any shape or form at this stage for that reason. Woolworths, on the other hand, I think is an aggressive, potentially aggressive setup. Again, we can see what's happening down here with volume. I mean, big spike, decent spike here, little push here, and then the candles. The candles are the key. And I think here's an aggressive setup, plus 1/6. And then here you could go plus 1/6. And even on today's candle, I think this is probably the last chance you could do it, because you're just getting too close to the dark pink zone now. So yeah, as an aggressive setup, if you had been adding to this, I'm pretty sure we spoke about this a while back. And sometimes I might have done the markings up in here, which is the charts I use for market index, so I have to clear them out. I really should be remembering to do it in here, where I can keep them. But I feel we did have this discussion, so let's change that to a 6 as well. Yes, it's a yes for me. Aggressive setup only, knowing the risk, and taking a small bite on the basis that we do have some signs that demand is coming back in en masse. From Robert now, COV. Looks great, a little bit like what I spoke about earlier, where it was getting close to 50 but didn't quite get there. Great looking chart, might have been Summit. Not a great candle today. Is that enough? Is that a species ending event? It's not a good candle, Robert. You know it's not. I don't have to tell you that. But I don't think it's enough within the context of everything else to take anything off the table yet. And I know this frustrates people. Oh, Carl, just tell me I can get out. I'm going to go FRP until I see another confirmation. I just want to see confirmation of that supply, because I don't want to get out of what is starting to look like a really great trend. So I'm going to go FRP. I wouldn't buy it because of the long white shadow, long upper shadow. CYM is looking very suspicious, like a turnaround play. So this is great. Finally got here to this turnaround setup. So I have run this in the watch list as a turnaround setup, and I might have done it somewhere around that candle. I can't recall. Maybe it was that candle. I think it might have been that candle, to be fair, because that's where it's getting out of the amber zone. But at least we've got an amber zone. In fact, we have talked about this. Look at all the times we've talked about this. We might have talked about it as an aggressive setup around there. So we're seeing some consistency in the messaging I'm giving you. I didn't run it in the shortlist today because, again, it's just that price action. So whilst this is a tick, and this is a really good tick today, so I'm really happy with it today. It almost made it into the shortlist, but I just felt like I felt for, was it Fortescue? So again, just showing you consistency in my approach, and these are questions without notice you're giving me. I can't make this stuff up. I didn't know you were going to ask me this after Fortescue, but you can see now why I didn't run it in the shortlist today. So I am consistent in my shortlist, because this last trough here, T0, I really would prefer that to be above P1. Okay, that's P0. So that's why I didn't run it today. But I think it's fine. I still think it's okay. It just didn't make it in the shortlist today. What would get into the shortlist? What would make me put a plus 1/3 on it? Just give me another big white candle that I think. It's what I said about for the Fortescue, exactly what I said back there. Just give me one more nice white candle showing, telling me that the supply from this big black candle is no longer in play. But yeah, happy holder if I had it, on the basis that it's a turnaround play, just watching for the candles for a potential addition. EQN is one that I showed you earlier on, so I don't think I need to say anything more about it. Plus 1/3, pretty happily on that one. Everything's checking out. Let me write it in for you. And let's go to Perry saying recession, Michael saying recession. They're all the correct answers when interest rates are going down and stocks are going down. It's not good, because it can mean only one thing, that the markets are factoring in rate cuts. Why would you cut rates when there's inflation around? You're doing it because you're worried about recession. Remind me of Ross saying it looks like the lumber chart. Lumber, yeah, we talked about that as well. That's another one that's heading down rapidly, and many of that data that's coming out regarding the US housing market is also substantially weaker too, and that's a big driver of the wealth effect over there, and therefore consumption that comes from that. But we can sit here all night and make bearish cases for the US. And that's what people do in other podcasts, don't they? It's just so stupid and pointless. Charts are going up. The money's going in, and then eventually the money will stop going in, and then we'll worry about it. Market is random, says Barry. I agree with that. The market is random. Please don't think that this chart here. Look, as Carl said, it's got a green ribbon. It's got a green ribbon, and he said the peaks are going up, the troughs are going. So it's got some white candles that's going up. No, those things are often consistent with prices going up, but they don't mean prices are going up. They're often consistent with prices are going up. The market is random. The next print, nobody has, well, I guess the people who trade have control, but unless it's us, we don't have any control. The market is random, and those that money, the supply and demand is hitting for whatever reason. That is the smartest thing you've ever said, Barry. The market is random. And always respect that. Never lose that respect that anything can happen and that you know nothing. Because when you start to have that arrogance, I know what's going to happen next because of this X, Y, and Z, whether it be technical or fundamental, you are setting yourself up for a big downfall, mate. The market is random. You know nothing. I don't know why Barry's telling me this. And he's saying, number 2, end of financial year and whatever else is the best guess. Oh, he's responding to my question as to why rates are going down and stocks are going down. That's the best answer. Recession? Maybe. Market is random? Absolutely. From Barry, same Barry, SLC. I laugh because you have this stuff and the stuff before, which is impeccable, perfect, and then you get a day like this where the market, it's just a crappy market, and it's not enough to get me out. And I know it's frustrating, and I've said that 1,000 times a day, but I'm going to go FRP. I'm not going to add, obviously, but still FRP. But Carl, I just want to get out. I'm nervous. Hey, you do you. The market is random. We could be at 8,000 by the end of Friday. Let's go to CAT, which a little bit frustrating here, but great chart. FRP, no questions asked, not wanting to sell any of those at this point in time, but not buying. That's what I meant to say. Barry also, A4N, he's saying not yet, and I don't think that's a yet either. I actually don't know, it was looking pretty awful. I think, the fact that it had come down through here, such a clean move, and then showing that's now direct supply. I'm a bit worried about that. I certainly wouldn't be buying it. I wouldn't short it either. Matthew saying, is that why you wait for the close and last top 10%? Is that, well, I'm not sure when you asked the question, Matthew, but yes, I do like to wait for the close, and I do want to see it close very near the high. 10% is probably a little bit strict. You can go, I don't know, if you went 20%, I'd be happy, okay? Close to the high. I'm not giving you an algorithm here. It's not a black box system. A lot of it is how you feel. But if I can train you to feel the right way, trust me, that is just as good as any algorithm. In fact, it's probably better. Let's go to Jackie, who's got JIN. I shortlisted this today. Did I? I don't think I put it in my... no, I didn't put in my shortlist of shortlists. I didn't put it in my feature charts. But it very well could have been. And yeah, I'm not sure what's going on here because it doesn't make sense to put 1/3 on that candle. So I can't remember what I was talking about. That candle, I don't mind 1/3, but not the other one. And I'm not sure what was going on here. But let's forget that. I don't know. Maybe I was talking about a bit of supply coming in. I don't know. But let's go back to here. I think this is fine. Yeah, I could add 1/3 on this. Absolutely. I could happily go plus 1/3 on this one. But let me repurpose this stuff and make that red and push that over. And maybe I can draw those back in. So look, there is some supply clearly evident around this point, and we want to make sure that we can get 1-to-1. So if we are getting in around the current level, and logically, stops are kind of going here, soft stops are going here, can we get 1-to-1 into that point of supply? I think we can. And I can prove it to you because if I draw this arrow, and this is where some of these tools become handy. Let's draw it the other way because, hey, why do we need it to draw? Just use it. And if we get, you can see I'm okay with it. I think we've got the better part of 1-to-1 there, so it's a tick for me. I have drawn it already. Let's go to EMV for Jackie. EMV, I'm getting very close to turnaround for US stocks. I think it's okay. It's not knocking my socks off. I'm giving it a 4 out of 10. So not a 5 yet. What would upgrade it to a 5? Something like this. Definitely get it to a warm 5. White candles, high peaks, high troughs, all that sort of stuff. But it's a long way away from me. No. If I had it, could I hold it? I can hold it on the basis that it's kind of heading back up. But yeah, it's not. It's I question why I've got it. That's for sure. Let's go to ASX. They're on the ASX, not the ASX. And going to Linda, who's EEG, which did we have a look at? I don't think so. It's on my list. It's a happy hold. It's like many of the other ones we've seen. FRP. Yep, there's not enough for me to want to get out based upon that last candle. PLS is for please, saying Adonis, yeah. And I think a few people saying, please go back up, PLS. I'm sure you've done this before, but haven't heard. What are your technicals on TradingView? Thanks, says Francine. Francine, you just send me an email and I will give you access to my technicals on TradingView, so you don't have to worry about that. You'll just have it. How's that? Then that's probably the best way to do it. Let me refresh that damn thing again. So you're talking about my ribbons here, Francine, and yes, I just magically you send me an email with your handle, your TradingView handle. So what's mine? Mine is just Carl Capilingua. I go into profile. I can leave that, and then there's I go into scripts. I go into Capilingua dynamic support and resistance clouds, and I click something here somewhere. I can't remember. There, I click on it. There we go. And then somewhere in here, I manage access. There you go. And I can add new users, and I put your handle in there, and then I add you, and then you've got my ribbons. Okay. So anybody else who's listening who doesn't have them yet, that's what you do. Send me your TradingView handle, and you get access to those for nothing, for free, for I don't know, forever, for as long as I'm around. Let's go to Haraju, who's got Zip, which looks great, like so many others, but also today with the black candle is disappointing. Happy holder, but just mindful, Haraju, of what's going on up here, because as you can see in the past, we had some exits from here. Have we had some entries back in? Not for me, no. I'm not a buyer on any of these candles, to be fair. In fact, I think this is the first one out of all of these where I could be tempted to do it. But even so, I'm too close now to the supply zone to want to do it. So I'm telling you how I feel about it. I wouldn't be in Zip right now. And I totally respect that there's some very good things happening again. But I'm concerned about that major point of supply at this stage. What could change this around for me? I just want to see, and maybe even today's the test of it, but I do want to see just a little bit more confidence around that point of supply and getting ready for the next leg. I'm happy to give this another 20 cents, maybe not 20 cents, but at least another 10 or 15 before I get in. So this is not enough for me because of the severity of this. But I can see why, if you had looked at it and said, oh, I'm going to get back in, I see a bunch of white candles, I can see why you would do it. We're all a bit different, as I said. It's not a black box system, it's not an algorithm. Some things will appeal more to the others, but what I've just told you is consistent with what I've taught you. There's a bloody big point of supply up there. That concerns me. PGC, nothing concerns me on this chart. So this is all very good. In fact, you can see we've done some drawings in the past, and we've gone through a little bit of a point of supply. Yes, we have, and the next point of supply is not far away, to be fair. And we might just draw that across now and zoom back in, and it's going to kick in around there. So just keep that in mind, whoever asked me that one, Harachi. So watch the candles in there. I don't think you need to automatically manage your risk when you get there, but just see how it behaves when we do get there. Okay, how long ago was that? We're talking middle of last year for that one, and then sort of middle of 2022. That's starting to get a bit old in the tooth. As in, if you're still holding from there, if you're still holding a grudge from there, it's unlikely. You're probably out of the market already, but just keep an eye. Peter wants BOT. Let me get back to my default zoom. Back to normal. Ditto. How many times have we? Because we follow good charts now, don't we? We're all following good charts. That's not enough of a signal there for me to get out. That's frustrating. I know you want to take your profits, but for me, it still holds. This one is easy. I suspect I don't think I've given you this one, and I suspect I haven't because it's clearly, I can tell you right now, it is not going to make my liquidity filter, which is an average daily turnover of $200,000, which is minuscule in itself. But I suspect this is way less than that. But magic doesn't mean you can't trade it. It just means, with these sorts of things, I need to be careful if I'm putting a very, very small illiquid stock in front of lots of people. So it's just me trying to be responsible. But FRP there, absolutely. And for anybody else, I could not just FRP, but happily continue to add risk on this one. I think this looks very good. And that is it for us in Australia, and we are going to very quickly now get back up the list. Maybe we've got 10 minutes left in today's session, and go here and check out our US stocks. And the first one we've got, maybe if I click on one of these, no, I've broken it. Where do I go here? Markets, products. I'm just going to go back. back. There we go. Okay, so we're going to go to Peter's first one, heading back up, AVGO, Broadcom. Oh, look at that. Big gap, big run. It was looking good before this. So here, plus 1/3, you would have had the benefit. Even that one, nice big white candle. Big white candle coming out of the zone. Not so worried about this point of supply now. And that point of supply in itself is a test of this point of supply. So every reason to have a crack at it through here. And still plus 1/3 for me. I know it's a long way away from the light green zone though. And that would be the only reason why you might not do the full 1/3. So that's not to say that you wouldn't do anything. I think you do something, but it's just a question of, damn it, I'm not in Amy Broker anymore. The 1/3 there. So let me save that away for next time. And let's go up to the next one, which is trying not to miss any along the way. And if I do, I apologise. I will ask you to tell me again at the end. But this is a difficult exercise. Costco, I think, is the next one from Jason. And I'd have to do the offline request. Magic. I don't need to say anything here. It's unless you're listening to me for the first time, and very occasionally somebody does join us, so I do have to be careful. But it is a picture of excess demand. Below Europe, whatever, all the bad stuff we talked about, the Russell 2000 rates falling and stocks falling. For some stocks, it just doesn't matter. They are going to find a way to flourish through the apparently impending recession. Costco probably makes a lot of sense, doesn't it? No questions asked, plus 1/3 for me on that one. Lost my train of thought. My train of thought has returned. I want to go to here, and Craig had NVDA before we forget. Why not? And nothing to see here. I don't know if I'm going plus 1/3 on that last candle. A little bit of a shadow up top. It's not a bad candle. I'm just being pedantic here because I'm guessing you've probably all got enough risk in this thing by now. Happy holder, no complaints. FRP. I don't know, if you didn't have some and you wanted to just get some skin in the game, I wouldn't complain. The candle before it was a yes. That was a high close. Look, I could add a 1/6 on the basis of that last candle, but there's plenty of risk already, I suggest, on this one. And there might be better things, than everybody's obsessed with NVIDIA. There might be something else there that's just starting to be obsessed with by US investors. That should be the extent of the offline requests. Going to head back to you lot, and we're going to do, in fact, Jason's were all US stocks. So this is TJX Companies, ditto. I was in the process of explaining to the uninitiated why these are automatic plus 1/3. And that's because of the light green zone and the dark green zone telling me that there's just this general ebb and flow of excess demand. People are buying, people don't want to sell. Why are they buying? Think the stock's good. Why don't they want to sell? They think the stock's good. Who thinks the stock's good? Everyone. That's why it's going up. So I think the stock's good. Price action, rising peaks, rising troughs, and nice extensions on the way up, very shallow on the way down, and then you've got a predominance of white candles and or lower shadows. So they're all the ticks I need. Let's save that one away. Head to Jason's next one, which is ROL, Rollins Inc, and maybe the best of the lot because I like the consolidation pattern there. What I didn't do on the other ones, which I will now go back and do, is just check the weekly chart to see if there's anything lurking there in the, off the daily chart that I can't see, points of supply that I should be concerned about. There isn't on this one, so this is a compulsory. Plus 1/3 for me, absolutely no questions asked. Getting some risk in this one as quickly as possible and seeing how we go after that. And this idea of plus 1/3, why don't you just, what does 1/3 mean? I say, well, whatever you normally would do for your share trades before you met me, divide that by 3, and that's it. That's what we're doing here. So I like to put small amounts on lots of trades. Okay, I'll operate like a hedge fund manager. I've got lots of stocks, risk spread wide, small and wide, and if something is good and it continues to be good, that's when it gets more, and that's when it gets more, and that's when it gets more. And as things are not good, they get turfed out, and you might find that actually you end up with quite a lot of risk on some of the stocks, but you're starting out small. Let's go to, in fact, I'm just going to double back, just in the interest of completeness, and just look up. Costco's got to be an all-time high. Surely there's nothing out there. There is nothing out there. And TJX, I'm sure Jason's already done this. Weekly, you can see we're already on the weekly. Nothing out there to worry about. So those are fine. And the other one which was put to me was NVIDIA. I know that one's blue sky. AVGO is the final one. And that is, look at that. It looks even better on the weekly chart. That is 100% blue sky. So we're looking at the cream of the crop. We're looking at the best of the best. And I learnt today, I was listening to a podcast, which is worth listening to. Coincidentally, we talked last week about Jesse Livermore, Life and Times, and it's on Spotify. It's a free podcast. It's a 3-parter on the 1929 stock market crash. And I'm sure if you just Google 1929 stock market crash podcast, you're probably going to find it. It's in 3 parts, and it goes through actually Jesse Livermore's story, told me quite a few things I didn't know about him, including his womanizing. I didn't know about that. His penchant for fast times, fast cars, fast drink and fast women, and fast trading as well. So that's worth listening to. And they explained why we have this term blue sky. Obviously, it makes sense. Blue sky is nothing up there, but there was a song in the 1920s about blue skies and good times, and that's where it came about. And everything we've looked at today in the US is blue sky. So I can recommend listening to that. I'm halfway through part 2 of the part 3 of the 3-part series. Let us go to scrolling back up the list now. So I've gone down, I've gone up, I've gone down, I've gone back up again. Costco we've done. Getting very close here. Perry's got Costco. Obviously we've done Costco. UTHR, which is United Therapeutics Corporation, looks very, very good. Let me just flick out here and see that there's nothing there. There is nothing. Like it even better. I love that big pace pattern. That's magic. I'm just noticing we're a little bit close to 300s. I'm not too stressed out about it. It's not like it's a 500 or 1,000. So I could go absolutely yes for here. I can't see. There's nothing in there. So there's a few upper shadows here, but now we closed above them. It does look like a little bit of pesky supply here and there, but it looks like we're dispensing with that. I mean, that supply zone is here. That's where they say, it's expensive here. It's expensive here. Maybe the last few sort of sold out there. Look, I'm just talking you through my logic, Perry, but no complaints. Plus 1/3, and let's just say if you had it, FRP also. and save that away. I'm going to go to your last one is actually one we've already done, ROL, Rollins Inc, which I didn't save it. I'll save it now. And if I didn't check the weekly chart, maybe I didn't. I'll check it now. No, that's magic. Looks great. No complaints at all there. Let's do Adonis's, and then we're done for the evening. He has NFLX, Netflix. I haven't looked at this one for a while, apart from watching it on TV. That looks fine. Let's go out to here. A little bit of a point there, Adonis. Not sure if you caught that one. Is it concerning me enough to just maybe hold off a little bit? Look, in light of all the other setups we've seen today that look pretty neat, maybe you could hold off a little bit. I don't know. Look, if it worries you, don't do it. If it doesn't worry you, then do it. But go into it, eyes wide open. Okay. I guess that's what I'm here for, isn't it? Just to give you that sort of just little extra check of things. Applied materials. I don't think we're going to have any issues here, and we're certainly not. That is all blue sky, good times, and it's magic. I mean, this is so good. I really, no complaints. And is it making anybody else nervous when we're seeing all the other, bad is probably too strong a word, but inconsistent stuff, and then we're just seeing so many great charts here on Nasdaq stocks. It is what it is. SMH, VanEck Semiconductor ETF. Obviously, I gave you the Australian version, the SEMI on the ASX. A lot of acronyms going on there, but yeah, look, absolutely plus 1/3. It's probably going to move like Nasdaq. It is going to move like the Nasdaq, but it's going to move a bit like Nvidia, isn't it? So don't be completely ignorant about that. So if you're long to the teeth on Nvidia, you might want to think twice about adding this, which no doubt the largest component of this is going to be Nvidia, isn't it? Okay, so be sensible about these things. And that's it. Now let me know if I did miss yours. This is your last chance to do that. I think we're good. I'm going to head back to the presentation and remind you, of course, that everything we've discussed this evening is general in nature. If you saw Roaring Kitty's disclaimer on his live stream the other night, which I caught a little bit of, hilarious. His disclaimer's way longer than mine, but they're very similar in telling you, hey, don't trust us. What the hell do we know? Okay? At the end of the day, it's your money and you've got to be sensible with it. And I think we can wrap it up in a nutshell on that note. On that note, obviously, thanks for joining me tonight. It's been an absolute pleasure chatting with you. Hang in there. Hang in there is appropriate. What else have we got? We've got keep calm and follow the trend. Also, all the best for your trading and investing. Until we catch up again. Bye-bye for now.